The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman on this Thursday, the 25th of September. This is fascinating. Let me go through this because although tomorrow's Technical Friday, where I get into the technicalities of the Chapman methodology a little bit more, let me explain what I'm looking at here. So the Dow right now is down 119 at 46,000. So we implemented a short position, even though we've got our core long position, 3 times long, still got the position that was established in April. And this is a counter trend. But I was very hesitant to do that for 3 reasons. One is that 9-period moving average. I wonder if I can do this. Let me see. Can I go? Yeah, I'll just go here. Let me use this 9-period moving average. Go right there. So look at this. This is the Dow, black background, and all it's got is the price bar chart, open, high, low, and close, and the green and pink 9-period moving average. Green when the 9-period moving average is above the 14, and pink when it's below. And look at this. The price has gone below the green moving average, but it hasn't turned down. Actually, I should do this. Let me do this here. So this is what I show subscribers every day. The 3 white panels. That's what I give them every single day. I tell you exactly what to look for and why you're looking for it and what to expect in the Chapman methodology and the 9-period moving average and the MACD, everything about this. Daily, 120. But look, that 9-period moving average is way above the 14-period moving average. I also, on this particular, I don't ever use it. I've had it here for years, and I just keep it there because I just keep it there. I don't know why this is a 20-period exponential moving average, this thick, light pink one. But look at that. Look what happened when we were pulling back here. Look what was happening when we pulled back. There you went pink. That was for the October. Sorry, that was the August 1st low. But here, look how you pull back, and you still held beautifully. So this to me that was number one. That the hesitancy was that the 9-period was over the 14. But the reason why I did it is that we did get a peak D underneath this multi-time hit Chapman inside track repellent bar just for one period of a day. It went 3 days ago. It went positive. That was on Monday. It was on Tuesday, and look what's happened. It pulled back. It's gone to a peak D, and that's usually in the Chapman methodology where you start to assess. And I thought, I don't want to go to the SPXS, which is 3 times short the S&P, because on Monday it reverse splits 10 for 1, I think 10, or sometimes it's even more, 15 for 1, and it just gets confusing. I didn't want to get involved with that. So I thought, I'm going to do this because it looks to me like, now I can go to this chart again, and it looks to me as if, based on the strength of the weekly and the strength of the monthly, that this could go sideways to choppy, and until we get into the end to the end of this week, beginning of next week, where we could start to get a sense of the government shutdown, just as a theme. I don't know if I don't even recall anything other than if it ever happens, it very quickly gets resolved and folks get their money. But it's a hazard. Yeah, it's not pleasant. But anyway, I'm just looking at this, and there's nothing else that says to me in the Dow particularly that I'm looking at a smash to the downside unless there's bad news. So it was with hesitancy that we did. In fact, some people might not have got it because I gave it at a specific range. We were able to get it before the market opened, or actually very soon after I sent out the newsletter at 8, let me think about this. I think it was at about 8:12. Right. So now what we're looking at is there is internal strength based on the technicals. The other thing is the MACD was about to turn negative, and today it did. The stochastic was beautiful at 83%. Now it's at 75%. The on-balance volume was pulling back. So there were a number of aspects that said to me, on a purely technical basis, yes, you could go short, but on the one basis that I have hesitancy is that 9-period moving average is so strong that you don't get too carried away. So with that said, we've taken some really nice profits in some of the positions that we had, and we've lightened up. We've raised some cash. I'm anticipating there's enough choppiness over the next couple of weeks to say that you're going to be able to get some positions that maybe you missed or you had, and you got taken a little bit off to put that money back. That's the way I'm looking at it. But have a look at this. The S&P. Look at that gap, and yet at the moment, as we're speaking, the S&P is down 31 at 6607, and it's at the high of the day, even though it's gapped down. And that 9-period moving average, it went under the 14. It hasn't gone under the 14 since just a brief moment on the 5th of September, and then it went up again. So I'm watching this, and if you look at the weekly charts, they are so strong. QQQ, same thing. Dips down. Yesterday it hit the low of it was on the 9-period moving average. Today it went under the 14, and at this very moment it's at the high of the day. So all I'm saying is that I'm preparing. We've got all our core positions, our long positions, and within that context, the QQQ is only a leg C in the weekly chart, still very good. It should go to a leg D at some point, and we'll see, because if it takes out 585 by Tuesday or Wednesday of next week, then it's a little bit more serious. That's the QQQ. IWM a little different. The IWM was coming down after making an all-time high. Struggle. Finally, it goes from the 161 level in October of last year that went to, for the second time, it went to 244, the same as it had 4 years ago, November 4 years ago, plumbs down to the 170 level. And what does it do? It goes to 247.18. 2.5 points above the double top all-time highs. But the fact that it got there is really important, because look at the monthly chart. The 9 on that sharp pullback never went pink down to the April low. The MACD is positive. The on-balance volume, let me go to the relative strength, is back where it was at the 244.98 in November 2024. We're anticipating a little bit, aren't we? It's 2024. There it is. Put the 4 in. Okay. High. And the stochastic is still under 80% at 69%. So it's got a little bit of work cut out for it. But look at the weekly chart, 92% in the stochastic. And here we are at 247, and the price is intraday. We're almost at the high of the day. 239.53 was the high, and we're at 239.31. So I'm looking at this and saying it's a work in progress, even though my gut says, gee, we've had some crazy action here. IONQ, a whole bunch in this particular area. Look at that. Down 4 points today at 69.49 after hitting an all-time high 2 sessions ago in the 75s. What was it exactly? 76.13. And that was a peak C. It suggests it should still go to a D. But those stocks we're looking at somewhat overbought. I'll be right back. So the Dow's now only down 72, and the S&P is down 33. I'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi folks, we're back. So I'm just showing you the E-mini right now. They made a very nice low, the 6630 level. They turned around and made this H pattern. Remember the lowercase h, if it's successful and doesn't take out the left side low, it can form a cup formation. If it starts to take out the candle high of the arch and hold 2 out of 3 sessions above that, and that level was at 6658, 6650.50, it should go higher, and it did. It's gone to a peak D and an E. Just went to an E. Right, the 200-period moving average is at 65.61, and it's trading right now just above it. It's like a magnet. It grabbed it, and now it's going to hold it for a little while. But this is what I'm talking about. And I thought about it so much. I said, you know, you promised yourself that you would stay vigilant, looking at the 9-period moving average, but at the same time, it's more like an insurance policy that I said. I don't know yet if it's a trend, but it's an insurance policy. That 9-period moving, it's a magic thing. You know, I've showed it for so long, and until the price flips to pink, that's where you get the deeper correction. Even if it's brief, usually it could be, talk about the pink. Let me just show you. Yeah, here's the 10-minute E-mini chart. Look at this. Just look at the green in the 10-minute chart. This is green from just after the market closed yesterday, all the way to right there, to 10 minutes to 1. This is AM this morning, and then it stayed pink. Although even now it's still pink, so it's gone. Let's just see what the price was. So the pink was at, let's go to the high of that bar, 6702.75, and it's still pink, and you're at 66.57. So it's just a remarkable technique, because even if you actually use the MACD, that's not as good, because this stayed pink even on the bounce. And that's telling you the stochastic is probably not going to go over 80%, and it didn't. So, okay, I just wanted to show you some of the techniques. It's not Technical Friday, but I want to show you. And I'm showing it because I wanted to show it for myself, to say you should have the patience. So I've been saying for a very long time that for a market to go down, you have to have a news title. You have to have the headline. You have to have something that permeates the market with negativity. We got that at the close yesterday and going into this morning, but that so far it feels like a one-off. To get it to be sustained. And the other thing is, together with that, you want to see the VIX index. Now, let me show you something about the VIX index. The VIX index followed for years and years and years. Used to always talk about it with Tom. And here we go. So the VIX together with the churn. And look at this, 16.80 right now, up 62. So we were at all-time highs a few days ago, but the VIX made its low at 13. Actually, no, it was 14.12. I thought it just went under. No, it was at 14.12. And that was the end of 14.12, right there. And within 2 days, so that was on August the 28th. On the 29th, the high was 15.92. And on the 2nd of September, the high was 19.38. And I always say, coming off an all-time high, if the volatility index, the VIX index, the volatility index immediately screams to the upside, usually it's too quick. What I like to see is a slow move up in the volatility index before the bad news really comes. And then the bad news comes and it doesn't come even close to the previous low. That'll be 1421. And that's when it starts the move that goes to the 22, 25 or higher area. So that's kind of what I'm looking for. And I'm saying that what I'm preparing to do is to say that the Dow, which went to an all-time high just 3 sessions ago, at the 46,714 level, look, it had this, I show it as a green line here. This is a Chapman wave inside track repellent zone. So it's very simple. If the let me just make that pink. If the VIX once again goes into that area and then goes above it, goes to the 46,880, touches 47,000, that is really bullish. But here you're looking at a bunch of resistance. So this is what I'm saying. I'm looking at this as if to say there's a chance that we could start to see sideways, a rotational move, maybe even goes like a rectangle for a little while, goes into early next week, Tuesday, maybe even Wednesday, who knows. But in the meantime, what we are looking at is that the 9 is still holding beautifully. Yeah, that's really important. But the MACD, the other technical indicators have started to weaken, but we've got the most important one that's holding really good. So maybe I didn't have enough patience. I don't know yet, but I'm just basing it on the Chapman wave peak D. That's where we get a little cautious and we start to see what happens next. And the market tells us. All right, I wanted to get that out of the way. Now, did I do this? Let me just show you high-grade copper. High-grade copper had a big spike again today. It went up to the 4.939 level. It's at 4.767. And if you're looking at SCCO, and the question came in, could I look at FCX and then SCCO? Yeah, so this is a really good move. The all-time high was 127.30. Yesterday's high was 120, so 127.30. Yesterday's high was 121.49. Oh, and a round number, 115 round number. And right now it's trading at 118.19. So in a way, it's kind of negated that 115 round number. So we'll be looking at this. So this, let me just do that. So let me just do this real quickly. I should have seen this. Whenever you get a cluster of bars under the original peak A, but it doesn't take out the low, it means that there's a really good chance that this is going to go to a D. So here it goes, B, C, it's called the Chapman wave restart, D, and it even went to an E. Very strong, very nice. Leg D in the weekly chart. So this is Southern Copper. down $1.31, 118.19, doing very nicely, getting very close in the cup formation towards the old high of 127.30. Okay, next question came in. Could I look at FXI? FXI, that is the China large cap ETF, went to a peak F/C. I still don't. The way it's looking, it looks like a peak F right now. But the 9-period moving average, way above the 14, still very good. That says it should try to make a cup formation, try to get back to the 41.67 level. And it's a leg E, maybe a peak E by tomorrow's close. In the weekly chart, after that rectangle breakout, that's always very positive. And a leg D in the monthly chart. The other one was Queb, I think it was. I forgot to look. Queb. Queb is the Chinese Internet ETF, leg D in the monthly, leg E in the weekly. Well, it hasn't finished Friday. I have to wait for it. But so far, it's a leg E and a leg C, a peak C in the weekly. Still very positive. I'll be back in a moment. Basil Chapman. Then we want to look at the Amazons, etc. I'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Just a question about Tesla. Tesla made 4 sessions ago, made a high of 444.98. It's just gone sideways right now. It's down 13 at 429.11, and it's a leg C in the weekly chart. And you remember my analysis says that it should go to a leg D sometime if this continues with the Chapman Wave inside wedge dash green target resistance line. That should be somewhere before, before the 24th of October. Ooh, that's not very far away, huh? 24th of, anyway, that's what I've got in terms of this particular diagnosis and analysis. Key support, I'm suspecting that within that time, we will break underneath the gap low that was made on the 15th of September of 402.43. So it could be somewhat choppy over the next week or two, but I'm looking at higher highs. That's the way it's looking right now. Okay, the next question came in about Harmony. I did this analysis the other day, Harmony, and we were looking at the monthly chart. So look at the beautiful cup formation here. It goes from 18.77 back in April of this year. It pulls back under 13, and then on a lopsided gravy cup pattern, it runs all the way back to where? 18.71, 6 cents away. I mean, I don't know how these things do that. And now it's pulling back, it's down 23 cents. But the question was on the monthly chart, and it's not Technical Friday, but let me just do this because a couple of people asked me about a couple of the gold stocks like this that were very low priced in the single digits are now screamed up to double digits. So look, this is starting point, $1.94, back around about August, or so I'll give you the exact date. September, so that's exactly 3 years ago, it's trading at $1.94. That was the low. And then it goes peak A, peak B, peak C. I had a left side, right side price time match. It didn't get there. It almost got there in time and price, but it didn't make it, right? And the high that we were looking for was on the 31st, that was on July 2020, the high was 761. So it took a while, and then it broke right out. And it went to, so it broke C, and then it went to a D. Then the D made a Chapman Wave instant restart within 3 bars. But look what happened. It went to a peak E, and then it went to a peak F, meaning you got the instant restart. The back of your mind, you can go F/B, because that's the way it works in the instant restart. But then the $8, what was that, 804 low that was made in June of 2024 was taken out by just a fraction, but it was taken out at 797. So now it becomes a brand new leg A or a continuing leg G. And if it goes 1 penny above 18.77, the high of April, there's no H. That becomes a B. That is really, really positive. So the only way that this will fail is if in the next couple of days, in the next week, or the whole of this period, in other words, going to October, it doesn't break above 1877, I think it is. Yeah, 1877. It can tag 77, but it mustn't go 78. If it goes to 78, that's a brand new buy mode in a monthly chart. The only way it fails is if this suddenly breaks and goes under 12. I don't know what's going to take it under 12. It certainly could happen. There are a lot of people talking about gold and silver making all-time highs, and that's it for the rest of the year. I don't see that right now because I see enough geopolitical, regardless of the fact that it's being bought for many reasons. I see enough geopolitical reasons for me to say we don't want to get out of our gold or silver because it is... it's like an insurance, it's like governmental insurance, right? Both economic and geopolitical. So I think it's kind of here. That doesn't mean to say that you could have a rectangle formation from the cup that starts to fail, make a cup and handle, or it gets even deeper and it goes down to the 14 level. But at this particular point, I'm saying that while many of the gold and silver stocks are overbought. I don't see them as making the top of 2025. I don't have the evidence just yet. I might get a little later. Next question came in. Let me just get to PDYN. I don't know if that was for me. PDYN. Okay, that is Paladine AI Corporation. So it went to a peak, a leg B yesterday, pulled back very sharply, and now it's come back very nicely. It's only down 10 cents at 9.10. Yeah, there are a couple of these stocks. Now, in this category of stocks that have done fantastically percentage-wise over the last couple of days, we've got the one that we had. We've just taken a little bit off again, IREN. So Iran is trading now at 47.63, up 50 cents. We took a profit a little bit more today for 100%. But this is in an area that next generation data centers, renewable energy, GPUs, that's one thing. But as far as I've read and as far as I understand, this is one of the few in the area that actually makes money. That's the reason why I originally went for it, for the subscribers at around about in the 22s. And the reason why we would love to be able to keep it as a whole 2025 buy and maybe hold, but add to on pullbacks, because we've taken just a little bit. I'm trying to keep as much as possible, but still doing the money management. It's tough because the 9-period moving average is still strongly over the 40, and the price is over the 40. The MACD is good. I got that red RSI. That usually gives a clue that within, I should ask, we've got a little expert in the den, John. As I read this, the red RSI says that you're getting somewhat overbought, but it's just one technical indicator. And that, at this particular point, is the only one that actually gives me the signal, other than the on-balance volume, that it's overbought. The MACD is good, the rental strength at 90%. This is everything that you look for, you dream of, in fact. So that's what I'm looking at, and that's the reason I wanted to just bring it up, because you brought up, what was it, P9? Is that correct? Yeah. And the other thing is that there's a question, RGTI. Oh, look at that. That pulled back sharply. Yesterday it hit the 34s, and today the low is 28.78, and now it's trading at 31.67. I don't think things just give up like that. I'll be back in a moment. In fact, that's something I want to talk about. I want to go through a couple of these others that I had questions about. Yeah, I'll do that. There are just a couple that I want to look at, and I want to explain something about the relentlessness of a phase until it becomes out of phase. I'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019. finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, we're back and we're looking at, let me just show you a pattern here. I'm going to go to, I'll go to some of the quants in a moment. Look at this. So sometimes the price gets to a level and then it just stalls and then it goes into a rectangle formation. Look, this is basically a rectangle formation, just going sideways, very narrow range, 62 to 70, 8-point range for the E-mini. But look what's happening. The 9-period moving average, it's walking the 9. The MACD's weak. The on-balance run is very good. Stochastics improving, but still only 63%. And the gray RSI is improving. And all you can do here in this particular instance, if you're long, you just have to stay long. And in the Chapman methodology, look, this could be an F, but it could also be an alternate count B, because now look what you've got. You've got an A right there. You've got a B. You got a C, and a very, by a quarter of a point, you got a D. All right, a D's underneath the previous high, usually not good. And this tells you there's nothing to do if you're long, but the longer that you take to try to break the upside rectangle resistance, the horizontal line, the greater the chances are it's going to pull back towards the lower one. So this is where people say, well, you've got the alternate count. What do you do? I say there are times where you just have to wait and let the price tell you. There are other times that in your experience you can say, what happens here? You've got the cup formation. Look, there's a cup formation. All right, there's going to be Technical Friday, because as things are happening, I found that people have really said to me they prefer that I do it right on the spot than go back, because on the spot says I don't know what's going to happen next, but these are the things to look for. So there's the cup formation. Look vertically. All the technicals were really good right at that moment, and that moment was at 10:26 this morning. Now you're at 10:44. Well, actually, right now you're at 10:44, and the MACD is much weaker, but the histogram's improving a little bit. The stochastics start to improve. On balance, improving. Relative strength is not too good. So it tells you the rectangle could remain. Okay? So I just wanted to go through things live, and where it's time to say, hey, take a breather. There's nothing to do here. If you're in the position, hold it, put your stop in. At this point, I'll take a little bit off for insurance and just let it play out. The longer it goes, the greater the chances are that the 66, 62, 200-period exponential moving average is going to be tagged. That's the way I look at it. All right, now let's get back to our story. So we were looking at RGTI, had a really nice comeback this morning, made a peak, a leg E in the monthly chart, a weekly chart, only a leg C in the monthly. Now, QUBT, All right. So this is quantum computing, made a peak E about 6 sessions ago at the 24 level. Wow, did it make a round number? 23.98, almost a round number. And now it's pulled back sideways, but that's all it's doing. So what I do is I grab grab my rectangle toolbar right there, and I just say, okay, yeah, you are. Let's see what happens next, because below 18.90, it should go even lower. It's at 20.39 right now, down $1.02, and above 22.45. And it had a round number low. So 20 is really critical, but on the upside, it has to get to, I'd say 20.25 says, whoops, so you're going right back to test 24. All right? And next thing I had a question about was, okay. Yeah, so all of these, Jeff says, all of these vertical names are in for a rude awakening. You know, this is what I wanted to talk about. When a particular fad phase kicks in, it kicks in until either one instrument in that sector just blows up and really tanks the others, or there's a change in the economic environment, or the candles like this get so big that they have to start to shrink and they need to rest, and that's the digestive phase. But for them to tank, you have to go out of phase. And at this particular point, just for the moment, I don't think, because I'm sure there were quite a few people last night saying, oh, it's crazy, this is just ridiculous, it's ridiculous. And they're absolutely 100% correct, but that's got nothing to do with the... Do you think QBT, quantum computing, is listening to you? Do you think it even knows you? Do you think it even cares about you? No, it's got its own characteristics, it's got its own mechanism within it, and that's what has to play out before it gets overbought. And then you'd be correct. So, you could have said that. Look at this. Where was the other one? Well, even look at this one here, the one that we're in, Iran. I was looking at this and I said, oh, that's gone. Looking a little toppy there, looking at the top. No, I didn't want to do anything, Finally, we took one little bit, and now we've taken a little bit off here. But it still looks fantastic. The on-balance volume is absolutely overbought. But the stochastics at 91%. The MACD has the histogram still expanding. The radio strength is good. So I have to wait for the signals to give me the sign, just as I should have waited. Had promised myself, but I didn't keep that promise, that I wouldn't short the Dow until I got the 9 very close to crossing the green 9-period moving average, crossing the black. So even here I said, but it could be a process. And what I was thinking is that over a period of going into maybe Tuesday of next week, we chop around. We could even rally. We could even rally up to the high that was made right on the yesterday of 46,453. That's another almost 400 points from here. I don't know what's going to trigger it. It could happen. And that's what I'm saying. I'm just preparing. I want some insurance. We've got no insurance because we're only long, and that's what I wanted to do. So it was thought out, but I did go against my grain, which said, against the theory that I said, wait until it's getting close to the 9-period moving average, going pink, and it isn't. All right, next thing we're looking at here is, question came in. Oh, TLT. So the TLT is not bad. It's down 17 ticks at 88.82. And if you look at the TBT, which is the exact opposite, it's kind of stalled right there. The 9-period moving average is pink. It hasn't gone green yet. If it goes green, it means that yields are going much higher. So I'm looking at this and I'm saying there are hints, strong hints, but hints nevertheless. It's not proof, because the yield, and if you look at the 10-year yield, TNX.X, look at this, the TNX is rallying, but if you look at the weekly chart, it's just this arch formation with a little bit of a bounce, very negative 9-period under the 14, MACD's weak, stochastics at 17%. It doesn't look like it has the strength to move to the upside. So the price will tell us if it's going to. So this is leg B. Here's your peak A just by a fraction. There's your A, and there's your B. Right? And you'll have to see. The 200-period moving average is at 42.91 on the TNX, the 10-year yield. That's 4.291. Wow, that could shake things up a little bit because of the anticipation, not the fact that we haven't been there. Look, we've been there before. So I'm just saying, let the evidence prove what's going to happen next. And at this particular point, I'm a little bit cautious. So we'll be back for the final section. I had a couple of questions that I wanted to get to. One of them being XLF. How's that doing? And XLF right now made a double top peak C1, C2. I'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So remember, I mentioned this earlier, and I've written it in here. A long, narrow rectangle can last a lot longer than your patience. And look at this, for an hour now, we've been in this range, this 8-point range, just waiting. The result usually is that it breaks to the downside, tries to get back in. If it can't get back to the upper rectangle, horizontal high, it goes lower. And that's what I'm watching closely. So let me just sum it up as we're going to go to the end of the show. You're going to go to Steve Rhodes. Should be a great show with Steve, of course, as always. I wanted to just mention that at this particular point, I'm treating it as a work in progress. Look at the XLF, double top at 54.50 on the, this is on September the 18th. pulls back, 9-period moving average holds well, it pops up again. What does it do? It goes to 54.49, 1 penny lower. And that's like a peak C1 and a peak C2, acts like a peak D. So I'm watching this closely because in the next week, if the XLF closes under 52.20, it's at 53.65, I'd say 52. That's telling you that it's probably going to go lower. And then we've got to watch the yields very closely because when the yields have been going up, that seems to help the bank stocks. All right, and so we'll see what happens. Now, within the context of the market, at this particular point, digestive day, the day is young. Now the Dow's only down 2, and the S&P is down 21. And let's just see what happens with this rectangle. If this rectangle starts to break at 66.71 in the E-mini, the December, 66.80 will be key, because if it does that, then the 200-period moving average in the 5-minute chart of 66.84 will be helped, and this market will actually have a pretty decent close. And that would be a bit of a surprise. Not complaining, it's good, and we'll see what happens next. So have a wonderful day. Check out my opening call daily newsletter, has some really nice positions, and I will see you tomorrow. Stay tuned for Steve Rhodes and all the great programming.